And to our first conversation now, the Central Bank of Nigeria is reversing an 8-year-old policy that previously prohibited importers of 43 items ranging from rice to milk from accessing dollars through banks. With the removal of foreign exchange restrictions, let's explore who stands to gain and who may face setbacks. Joining us for this conversation now is Mr. Ayodeji Ebo, MD Optimus by AfriInvest, joining me via Zoom. Great to have you. Good morning.
Yeah, good morning. And it's great to be here.
Fantastic. So I remember many analysts and experts were clamoring for importers of the 43 items to have access to the official FX market. But it seems now we have it. It's being criticized, right now by some quarters. First of all, Mr. Ebo, how did you see this move by the CBN?
Okay, thank you very much. And I see this as a positive move. I'm also one of those that clamored for the removal of the restrictions, because why this is not a silver bullet to solving the FX problem. What we observed is the demand shift. So if we look at it in 2015, when the items were banned, it moved the demand from the official market to the unofficial market, and activities there began to create that spread that we currently see in the market. So, but what I would say is that beyond just removing the ban that's from participating in the Nigerian FX market or the official window, there's also a need to supply, because what we'll typically see now is that it's a demand shift. So the demand, again, would move back to the official window. And the question everyone will be asking is, does the CBN have the FX to supply to be able to meet demand? So what we would see, there will be initial major pressure within that market. Currently, I think as of Friday, the Nigerian foreign exchange market rate closed around 749 or 759 naira to $1. We would see if the CBN ensures that there is a willing buyer, willing seller market. We will see that shift towards, even if not above 800 naira to $1, because at the initial stage before supply would improve. But what we would also expect as we progress, once there's supply, the only first condition here that has to be fulfilled is that supply. Once there's supply, then we'll begin to see a moderation from the unofficial market. The pressure will reduce and convergence will begin. Because if there's no convergence, even those that need the dollar to import those items, when they have proceeds to sell, if they export, at what rate do you want them to sell it? Is it at the official market rate or at the parallel market rate? Once the gap is wide, like we currently have, almost close to 300 naira, it's going to be an incentive for people to run trips. So you'll be supplying them dollar at the official market and they will be selling at the unofficial market. So beyond this, there's a need to increase supply so that we can begin to see convergence between the two markets.
So I guess it's one thing to have access and it's another thing to actually get the dollars in that market. But break it for me now, who would you say are the gainers with the 43 items readmission?
Okay, thank you. Very interesting question. So first of all, we'll look at and identify who are those that are on this list. And when you check most of them, you have manufacturing, agri sector. Also, the Eurobonds market, sometimes we underestimate the liquidity they can provide. So when you check the current, total outstanding Eurobonds is about $15 billion, and it's estimated that about 20% are currently held by local investors. When you see the activity that they do most times, sometimes it can be as much as $30–40 million of buy and sell that they do in a week. that liquidity would move into the market. For them, they would be one of the winners because rather than buying at the current rate, if they are supplied, I'm using a condition, if they are supplied at the official market, it means the return to an average investor that is converting Naira to invest in Eurobond would be higher because you are buying at a lesser price. Also, the banks would also be a major, will benefit from this because when we had the 40% adjustment, a lot of them booked FX gains. We expect that there will be pressure in the official market that would also lead to the depreciation of the Naira, which will be positive for most of the banks that are long in dollar assets. That's also gain. And also, there are some importers of some major items that are not really being produced. There is no substitute for them here in Nigeria. There's no production here and they are not competing. They would also have access, if they are supplied, to cheaper source of dollars compared to the black market. Because yes, while we expect a convergence, there may still be a spread, in a little bit of spread in that market. So those are what I feel initially. I feel that would be the major gainers in this. And overall, we expect that the economy should also benefit once there's stability. Once there's supply, when there's stability, and we provide confidence in the market and we begin to attract inflows, then would also benefit because the way it's been going in the past 6 or 7 months, it's been impacting on consumer wallets.
And these 43 items were excluded to, help promote local production. Is it safe to say that the losers might be the local producers of these items?
Okay, thank you. Yes, so I think it's a chicken and egg situation because some of even the items were not very sufficient currently in the country. While it may impact and they will need to be more competitive, the federal government can also look for other ways, like cost of funds to them. If you reduce the cost of funds to them, it will also help them be able to reduce the cost of their product. If we improve on infrastructure, we provide power, we provide good roads, that would also impact and make them more competitive. So while the monetary policy is doing its own part, the fiscal authorities have a major role, especially the government. They have a major role to play to see how they can help make these companies more competitive. I think it's important. We need to make them more competitive. And it's not just about excluding them. Excluding them from the FX market is not necessarily going to make them competitive. Also, it's about those inefficiencies that we need to work on to reduce the cost of production so that over time, even for those items that we're importing, I always make reference to cars. To encourage local production, we have increased the tariff that you pay almost 2 times of the price you purchase the car to bring it here in Nigeria. We're suffering it. Is it helping our economy? Have we been able to produce? So these are some of the things that needs to be reviewed. And at the end of the day, we'll reduce the pressure that we continue to have on our pockets.
Right, production. But how does this play, into the inflation story? We're expecting inflation numbers for September today. Do you see, positive for the inflation story going forward?
No, I think it's too early to be able to be tying this to inflation numbers. Yes, for September, based on projection, I think we expect it to moderate from last month, but will still remain, I think, high. Projection here is about 26.8%, compared to 25.8% last month. However, we believe that there's still one necessary factor, one condition that needs to be fulfilled, which is supply. There's a need to improve supply. When you check average turnover on the formerly known as the investors and exporters window, it's currently average around $109 million. compared to what we used to have in 2019, 2018, which was as high as $250 million on the average for the year. So if we don't improve on the supply, no matter how interesting a policy may sound, it's not going to solve that particular problem, may even cause more pain. So there's a need to back that up with significant supply, such that we'll be able to get the right benefit that we expect from this this interesting policy that has just been made.
Yeah, very interesting policy, but we're expecting that inflation numbers today. What are you expecting? How bad could it be?
So if I'm going to take a bet based on our projection, is about 26.8%. We still feel the closure of the border will continue to weigh on food inflation. The exchange rate we've seen, and as at the end of last month, was almost close to 1,000 naira. That would impact on imported items. The price of diesel was also high due to crude oil prices. So that all those several factors would impact on inflation rate. So we expect it to go higher for the month of September compared to August.
Definitely looks like it appears the government is actually listening to most of the recommendations, like this 43 items issue. You did mention the borders now. Do you think the government is going to do something about the borders?
Yes, I think they will. But, beyond the closure of the border, the political crisis going on there is also part of what is impacting, and also based on the position that we have also taken. But there's a need, now that we are not self-sufficient in those things, there are other areas we can look at to make those local production competitive. It is not about just banning those items from coming in or increasing tariff, making it more expensive for people to bring them in. If we give them, subsidize it, rather than the money we are collecting from tariff, we subsidize it based on the funding to them, use those money, we build roads to encourage them, give them tax breaks. And once we focus on that, it will be very difficult to imported items to compete with locally made items, because we talk about proximity to market. So that will reduce that cost. But internally, there's a lot that has to be done around infrastructure. Rail system would be a major breaker for us if we're able to get it right in moving goods around Nigeria.
All right, looking at the equities market now, last week was a positive move we saw for the trading week. But, with this unbound of the 43 items, which stocks do you think, or which sectors on the equities market do you think is going to profit from this or actually take a loss?
Okay, thanks. So I expect the banks to profit from this because of the expected adjustments in the official market. And we feel for manufacturing companies, especially those that have item inputs on that list. And we think that in the medium to long term, because until we begin to see supply, in the medium to long term, it may impact if they are not competitive on their ability, on their revenue because of their cost of production. The likes of the agri sector, Presco, Okomu benefited significantly from the ban, and because a lot of manufacturing companies had to look inwards, and that increased their demand. So I feel that it's enough time to have given them that learning curve. Yes, while there are some inefficiencies they don't have control over, but I think over time they will also be able to weather the storm. I think by and large, we still expect that there will be a bit of corrections. We need to get the FX market right first before we would attract foreign portfolio investors into our market that will further propel retail investor. Yes, we are doing a lot in the last 3 years holding the market to this level, but there's a limit to how we can grow this market without the major inflow from foreign portfolio investors.
Yeah, local investors have been quite impressive in the market. But, going forward now, how can the government increase flow of USD in the short term and, get the exporters to actually sell their dollars to the banks from their proceeds instead of the parallel market?
Okay, I think the first thing, yes, is a tough decision. They need to come up with more structures. We spoke about the Afrexim, $3 billion. Is there any structure with NMPC they can come up with? IMF, they need to come up with structure. If it's another $3 billion they can access. And now, yes, it may look very expensive. Going to the Eurobonds market, there's appetite. They can also raise some fund, whether it's about $2 or $3 billion. We need that to improve on supply. If we don't improve on supply and the variance is still significant, it will be very difficult to convince the exporters to sell in the official market. They will look for ways that government will not have control over to sell at the parallel market. So once the first step is increased supply to begin to close the gap so that there's no incentive for round tripping or selling at the official market. And once we're able to close that gap, remittances is also a major area that would help. There are a lot of platforms now that are trying to help to bring in money into the country. But if we don't close that gap, most people will continue to use the unofficial market, estimated about $20 billion. So even if it's 50% of that we can attract to the official market, it's also going to create liquidity. And over time, we'll begin to see FPI inflow. Once there's consistency in policy, FPI inflow and FDI would also follow. And we'll be able to create that stability that I think we desire. We've seen it in 2017, after the implementation of the I&E window, for over 3 years, because there was stability in policy. We saw the consistent inflow, and it was also beneficial to Nigeria because we could project, and the Naira was very stable for a very long period before COVID-19 pandemic struck.
All right, Mr. Ebo, thank you so much. I wish we could all agree to, reduce demand in that other market and, get some strength into the Naira. Thank you so much for your perspective today, Mr. Ayodeji Ebo, MD, Optimist by AfriInvest. Thank you.
Always my pleasure. Thank you for having me.
All right, after the break, as the IMF World Bank meetings end in Marrakesh, we get a summary of proceedings. That's after the break. Do stay with us. This is Business Morning.